Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Monday, September 10th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. As we look at the week that was, we have a week that really you could put a big X across the effect on the economic announcements. A 4-day trading week, and nothing really great came out of it as far as strong surprises to the announcements. Looking at the week that's going to come, we see very little taking place on Monday, very little taking place on Tuesday, and as we come to Wednesday, that's when it begins. FOMC meeting begins on Wednesday. That certainly is capable of moving the market. Import and export prices are also on Wednesday. Looking at Thursday, we have our perpetual jobless claims at 8:30, and then PPI to tell us about the previous month that just took place. At 12:30, we have that all-important FOMC meeting. Expectations for that FOMC meeting are that they want to hear, Wall Street wants to hear something of easing, wants to hear something of QE3. Personal opinion, probably not going to hear it. Why on earth would they want to influence the election at this point, and they know that. So very unlikely that we'll see or hear much coming out of the FOMC week this time. Probably won't hear much until December when the election is over and done. Then when we come on to Friday, oh yes, CPI, last month's reports, that'll be big. Retail sales, yes. Industrial production, sort of. Consumer sentiment, huge. Business inventories, yes, that's part of what's going on. So we certainly have enough economic announcements this week to move the market any way they want to move it, and a good excuse to do so. Looking at the market for the last 3 months, you see we are definitely in an uptrend. And finally on Thursday, we went back up into that up cycle. Could you say too far, too fast? You could. Will it keep going? It could. What is the next target? 1440. All right, will it get there? We shall see. Looking at the week that was, we were on a down cycle the first 3 days, and then bingo, Thursday. Too far, too fast, but a continuation of that up cycle. Let's take a look at this in a little bit more detail, looking at a larger chart of what we had. On Monday, what we saw was that the stocks got off to a strong start before stumbling slightly when Federal Reserve Chairman Ben Bernanke did not come out with much news about easing, instead reaffirmed his commitment to act if economic conditions worsened. On Tuesday, we see that stocks are kind of opened up, changed, opening basically where they closed, and we see that they fell into red after the economic data missed some of its expectations and the down cycle continued. On Wednesday, we ended up with a inside day, which we can't say that we had a change in cycle, so that on Wednesday it basically spent most of its time in a narrow range around that unchanged line. And then finally on Thursday, equities began moving higher. We went into an up cycle, and we moved big, we moved fast, and it couldn't have moved any faster than it moved on Thursday. The bullish sentiment was sparked after Mario Draghi confirmed Thursday's reports of a European Central Bank that they were willing to buy bonds of troubled countries who would ask for aid. So this caused the market to move, one might say, too far, too fast. All right, should we get a pullback on Friday? Well, on Friday, we basically got off to a mixed start, didn't have a big day up, kind of a small range day, but nonetheless still continuing our upward cycle. So as a week, it was up for the week, and we'll see that when we look at our overall moves in the market. All right, next let's take a look and see what the Dow did under the same circumstances. And by the way, take a look at the SPX, and can you say that we had a breakout? Yes, we went on to new highs. Let's take a look at the Dow, and you'll see that we're still in the same trading range for the Dow, have not broken out on the Dow, and have not moved into new highs. All right, let's take a look at the NASDAQ. See that, say breakout on Thursday as we broke up into new highs, and the Dow at 12-year highs. Certainly something to write home about as we are moving up in this great economy. Looking at the Russell 2000, we see that it moved up and moved up strong following the S&P. So new highs coming out of the Russell 2000 also. And so looking at the week that was, looking at the Dow, the NASDAQ, the S&P 500, and the Russell, we see that all of them were in positive numbers. Everything there was in a positive number. And we see the changes were all above 1%, as the Dow went up 1.6%, NASDAQ went up 2.3% for the high of all of those percentage-wise, 2.2% as the S&P followed up very closely. And, I was wrong. The all-time high was 3.7% out of the Russell 2000. Looking at where we've gone for the year, we see that the Dow's up about 9%, NASDAQ up about 20% to give us the highest move for the year, S&P up 14%, and Russell up 13.7%, as it may have had a week that was, but it's still lagging a bit behind the S&P and the NASDAQ. So quite a week in the market as we saw new highs taking place in the S&P, the highest S&P we have seen in 2 years, and the NASDAQ highest we've seen in, go back 12 years. Pretty impressive. Looking at the VIX as the market went up, look at the fear come out of the market as the market went up. We saw the VIX pull back into that 14-point range, and so headed back to those previous lows of around 13.5. All right, let's see where the VIX finally bottoms out and turns around. By the way, you can certainly trade the VIX. There are ETFs to trade it. There are a number of different ways to trade it. You can trade it with options, and it will follow the pattern of the overall market, so it certainly provides for you some opportunities to do that. Let's take a look at some of the ETFs, looking at some of the sectors, looking at TLT, which is our bond sector, and we see that as the market went up, which way did the bonds go? They went down. No big surprise, following what we would consider to be normal trends. So remember, you kind of have an inverse relationship between bonds and the overall market. Next, let's take a look at the financials. We would expect financials to go up with the overall market. We got new highs for the year out of the financials as we have a, what one might call a breakout on volume. Pretty impressive as we go into this month of September, a month that is famous for its damage that it does to people's overall portfolios. So be careful in September as to watching for that big pullback. All right, now let's take a look at oil, and we see oil basically has gone sideways. No big moves up in USO, which is our ETF, giving us an indication of what oil is doing. So no breakout in oil. And finally, let's take a look at that gold ETF, GLD, and look at what happened. A flight to safety. All right, what does that tell you? As it has reached a pretty high level in gold. So some of the money looks like it may be very well leaving the market as the demand for gold has definitely gone up. All right, with that thought, that is the ETFs and the sectors. Let's see what kind of volume we had on our breakout. There's our Thursday breakout, and there's the volume that came with that breakout. Pretty impressive volume. Some of the higher volume for the month. Certainly not higher volume that we've had for the year, but the breakout certainly took place with some volume. A big week to come as we expect a lot of economic announcements, big news coming out of Bernanke, or lack of news, and the effect will it have on our market will make this a very interesting week in the market. And for those of you that are gold members, stick around for our stocks to watch. We'll see what happens with these as the overall market had what we call a breakout. So with that thought in mind, ladies and gentlemen, thank you for being here. This is Butch Shorak, Options University, Monday, September 10th, 2012. And for those of you that are interested in other free videos, go to www.optionsuniversity.com/free gold. Thank you, folks. Have a great week. Trade what you see, not what you think. And welcome back to our gold members. Let's take a look and see what we've got ahead of us. We obviously popped through that 14.15 that was there last week. We obviously popped through that 14.31. Those now can both be moved down to support. And our next target up here is 14.40 and above. Now the thing that's interesting, and we'll have to wait and see what will happen. We're going to get this high. I really feel that that's the case, and we might do it with a gap up on Monday. Now the real question is, are we going to do what normal markets do and start trading down? The key to that will be look for lower lows and lower highs. We can expect that we're going to go down fast and hard when we go down because we went up fast and hard, and we generally go down faster than we go up. So we'll see if they're looking for a reason for the market to go up or whether we're going to end up with irrational exuberance and continue up until we look and face the Fed meeting on Thursday. So what is the key to your trading? Look for higher highs and higher lows or lower highs and lower lows. By the way, it is possible that we could spend a couple days just trading sideways at this level. So watch your lower highs and lower lows and higher highs and higher lows to get a feeling as to where we are moving as we go into this next week. A lot of big news this week, and a lot of volatility could come into the market with that kind of news taking place. In the meantime, the market is in an upcycle, in an uptrend, and it stays that way until it ends. Looking at Amazon during this week, look what happened on Thursday and Friday. New highs, a breakout. Amazon has been a leader all the way. On a pullback, Amazon is a buy, and that's when you're interested in getting into this. A bit overextended at this point, and certainly not the best entry that you could possibly have. Got support there at 245. If we have a big pullback in the market, it could go back to that 30 to 50 day moving average, could come to this level right here, right around 235, which will be the 50-day moving average, but it'll take a big pullback in order to get Amazon there. So buy on pullbacks, Amazon. All right, next looking at Apple. Didn't really bust out, didn't really get new highs, kind of trading in that same zone. Did go down and fill the gap, trading a bit sideways. News coming on Apple. We'll see whether it decides to break out with the rest of the market. Certainly one of the market leaders as we look at the overall market. All right, AutoZone finally broke through that 200-day moving average, sitting above the 30 and the 50-day moving average. Look for a higher low for entry on Amazon. Still a long way from its highs of the years, as it will pull back strong if the overall market pulls back. Not one of the market leaders anymore. Next, let's take a look at CMG. Can you say breakout? Look at that Friday move in a market that didn't move all that far in the overall market. Sitting currently above the 50-day moving average, look for a pullback for your next entry for CMG. Looking at Google, can you say breakout? Remember, the strongest stocks are the last to pull back in general. Will Google pull back if the overall market pulls back? You bet it will, but the overall trend in Google is definitely up as we continue with this upward trend. Certainly one of the big market leaders. Green Mountain Coffee finally had a breakout and did break out of its previous trading zone. Let's see how far it actually moves. Not much risk that this thing is going to climb up anytime real fast, as it's had a bit of bad news and it takes a long time to overturn the characteristics of a company that's been a little bit snake bitten. ISRG had a big pullback. Can you say punished by earnings? Last earnings earnings period, it'll take new stronger earnings or news announcements for ISRG to get it up to its previous lofty levels, still trading below that 200-day moving average. Watch for this to hit the 200-day moving average and then look for potential downsweep if the overall market pulls back. Not a market leader anymore. Looking at MasterCard, we finally got a breakout out of its previous trading range. Next target 445. All right, let's take next a look at McDonald's. Looking at McDonald's, we see that McDonald's finally broke out of its trading. You hear all these companies breaking out of its trading range, but look at it, its previous high, not anywhere near it, as McDonald's is having trouble getting to where it once was. Part of the summer devastation that took place to a lot of our market leaders. Looking at Nike, trying to work its way back up. Filled its gap from its pullback from its earnings. It has finally filled its gap and now is up into newer areas, but still trading below that 200-day moving average. On a pullback, Nike may be one of those. You could make money to the downside. All right, looking at Priceline. Can you say punished by earnings with what? The volume. Who does that? Them or us? Them. All right. Slowly moving back up, has yet to close the gap, but certainly has had a couple nice moves from its down bottom at 560. Finally broke above the 200-day moving average. Priceline in its new trading range will trade with the overall market. And finally, WW Grainger did not get a breakout, did not break up into new highs. A non-exciting stock that is kind of a stock they head to for safety, and certainly a good performer in the overall market, but doesn't have the sexiness and move that a lot of our big-time stocks do. As we see, we did not break out of its current trading range. So those are the stocks that we looked at for the last week, and we see they provide for us potentials to the downside on a market pullback. They provide for us where our market winners are. So after the pullback, the ones that are our strongest stocks in down days, those are the stocks that really pop when the market turns around. So keep an eye on these. Time to develop your list for those stocks that are your bullish stocks when the market starts up. And with that, this is Butch Chorak, Options University. Ladies and gentlemen, thank you for being here. It's Monday, September 10th, 2012, and summer is over. Thanks.